Welcome out to another Trading Justice podcast. This is Mark Justice, joined with my brother Matt. Really excited to talk markets with my brother in this episode. There's two trades going on in the market right now. There's the QE trade that's doing very, very well. We see that in cyclical areas. We see that in a lot of charts. I mean, even utilities took a pop this last week. And then there's the AI trade, who's maybe not had as easy of a time weighing on the broad market. We're going to talk AI in our feature segment. Some of the questions the market is wrestling with. Have a nice conversation there after we walk through the market skyline. But Matt is coming up. Before we dive into the technicals on the chart, you're going to be teaching a technical course here in a week, which is, and I can't say enough how I've loved watching this evolve over the years. It is, to become a great trader, you need to learn to read a chart. Master Trader will help you read a chart and then some. Tell me about this before we dive into things.
Yeah, on February 23rd and 24th, we have the Pro Membership Master Trader. And if you want to attend that Master Trader, all you got to do is hit the link in the description below, and you will be registered for the absolute greatest it's over 2 nights, but two-session course on technical analysis that is out there in the market, hands down, no doubt about it. From trends, patterns, support, resistance, Elliott wave targeting, stop loss management, indicators, candlesticks, you name it, we covered in Master Trader. Master Trader is the foundational course of all education at tackle trading. So if you're interested in learning how to trade, there is no better place than Master Trader. And you can get access to that for absolutely free by hitting the link in the description below and signing up for a free trial membership of the Pro membership. You'll love it. And come hang out with me next Monday and Tuesday in Master Trader.
Oh, Matt, or excuse me, battling a little sickness here. Before we dive into the technicals in the market, like we just start every podcast, I think we just have to take a moment to honor Dow 50,000. For the first time in the history of the
Oh,
market, a specific level has been politicized. I was thinking about this all weekend as like, when has ever a level in the market become politicized? And Matt, if people don't know what I'm talking about, what am I referring to?
$50,000. Raskin, I hear you're a great trader. Oh man, I'm still laughing at that. I cannot get over it. That's Pam Bondi on the Hill last week. She was not there to talk about the financial world, but she did mention the Dow at 50K, the Nasdaq making all-time high records, and I'm like, the Nasdaq's in a current short-term downtrend. The S&P 500 at 7K, and I was watching like the rest of America. I was watching the hearing with Pam Bondi, and a lot of it was on the Epstein files, and I was fascinated by the conversation. So I was dialed in, checked in, and you know how I get on the political side. I get all geeked out. And when she went to her notes and there was a question regarding something regarding Epstein. And she went to her notes, and in her notes was a pre-written statement regarding what we should be talking about as a nation, not massive government cover-ups and child pedophilia rings ruling the world. None of that. None of that. We should be talking about the Dow at 50,000 and the S&P at 7,000 and the Nasdaq setting all-time highs and 401ks getting into records. And the whole time I'm thinking, man, that is the dumbest answer I've ever heard in my life. Like legitimately the dumbest answer I have ever heard in my life was that answer provided by Pam Bondi. If I was President Trump, would have fired her on the spot. No questions asked. You're gone. You're fired. It was absolutely ridiculous, number one. But number two, and we're certainly not going to detail all the things about the Epstein situation. That's others are handling that far better than we would. But number two, I was thinking, but the S&P hasn't broken out of 7K in 5 months. The Nasdaq is currently in a short-term downtrend and concern building and brewing and brewing. And literally the same day that Pam Bondi was talking about 50K Dow and 7K S&P, we got a jobs report that had a million revision from last year that showed a whopping 15,000 jobs created every single month, with AI basically coming to take all of it. I'm like, Pam Bondi, this is not your lane. Stay in your lane. This one's not it. I thought it was the most
50,000. I mean, she
like
would
that.
scream it. 50,000. I mean,
I'm not even
it's
sure she understands
the
the difference between $50,000 and 50,000 points. I'm not even sure she understands that difference, but I digress. Less of Pam Bondi in all of our lives
but
would be
it's
better.
now a political level. I just thought, like, when markets and politics intersect,
Um,
it's.
oh my goodness. My third thought was, did she just call a top?
I thought this. I was like, did you just put a short term top in there, Pat Bundy?
Like, did you just call a top?
Because, yeah, because now the jokes write themselves. You saw them
Hmm.
on X and social media the next day when the Dow dipped under 50,000. Well, now you can go
Yeah.
back to work and
Listen,
investigating Epstein.
listen, if the Attorney General of the United States can point to the Dow at 50K to justify a child pedophilia ring, we as other normal human beings can use 50K to justify anything in
Yeah.
life. Hey, wife, I forgot Valentine's Day, but the Dow's at 50K,
But the
honey.
Dow's at
It's at
50,000.
50K. You miss a birth, but the Dow's at 50K. It's the jokes write themselves. But it, what is not a joke is what is happening with the Epstein situation. And obviously, it goes without saying that anybody that does anything, and I guess this is just one of my core beliefs, but I think it's a core belief in our culture. You harm a kid, it doesn't ma-
Yeah,
it doesn't matter
I
what.
would like to think that's a little more than an 80-20
Yeah,
issue.
you hurt a kid, it's game over. Like I have no disagreement with any punishment phase in any capacity. Get him out of here. Like, I think we should all, as a society, strive for full transparency, and we should hold our government accountable to this situation because we don't have a government if we can't figure this one out.
Yeah, no, it's a big thing, but
Yeah, it's a big deal.
certainly markets and politics when they intersect, just
It's not good.
worth taking a
Not
moment.
good.
Doesn't happen every day. Worth
No.
taking a moment. But man, you highlighted that 7K level in
Yeah.
the market, and this is well chronicled. You wrote about this in the newsletter. This is a well chronicled market right now. It's two markets, right?
Mhm.
It's the everything else. It is cyclicals on fire. It's RSP breaking out, and it's a broad market with a weakened AI trade that
Mhm.
cannot penetrate 7K. And in fact, we're now dancing above the 20 weekly, hanging by a hair. Recording this on President's Day, market futures were open, didn't move much.
No, they
Uh,
didn't do anything today.
didn't move much, but just hanging on by the
Oh,
20
by the way,
weekly.
another weekend where the almighty bears coming out and predicting the end of the world due to the labor revision were wrong again.
Yeah, no, like listen,
It's like,
yes,
guys, that labor revision came out last week. The market was open.
yeah. Well, 3 day weekends, you got to write about something, and
Yeah, true.
margin growth, which we'll talk about, doesn't make as good a Twitter post.
Mm.
Good as Twitter post. But Matt, I mean, that's where we're on a technical. It's not a bad trader's market, isn't it? Right? With, different industries, doing just fine, different sectors doing just fine, but, obviously a broad market that is having a hard time breaking out. Give me your thoughts on technical. And while you do, will you mention the MACD? Because I found that particular point very, very interesting on the indicator section.
Oh yeah, well, I mean, when you're looking at the S&P 500, and if you just kind of understand the broad market through the S&P 500, you would basically say, hey, the broad market's been neutral for the better part of the last, 4 or 5 months, and I'd say you're absolutely right. But beneath the surface, you've had rotation, and that rotation has basically kept the markets in some degree of wide range neutrality right now. And so, despite the fact that you have a market that is basically neutral over the course of the last 4 to 5 months now, from literally third quarter reporting season in 25 to first quarter reporting season in 26, we've kind of been neutral along the way. But that's if you just look at the S&P 500. If you look at the Nasdaq and you look at kind of the ultimate leadership of the market, which the Nasdaq is usually that case, Mark, in a current short-term downtrend in the Nasdaq, and you've already hit the 200-day moving average in the Nasdaq. When you look at IGV, there's two basic industries within the Nasdaq. You have IGV, well, technology. You have IGV, which is the software components, which have been in a bearish downtrend for the last 3 to 4 months, and a tremendous bearish downtrend as well. And so, again, Pam Bondi last week talking about how great the market is and everything like that. I'm just like, there's some real big dogs in this market holding everything back. IGV being one of them. You look at SMH, which is the semiconductors, and they're doing absolutely fantastic. And so you've had this tale of two cities, and a lot of it is based on a little bit of what we see in technology itself, from software IGV showing tremendous downtrend to semiconductors doing absolutely amazing right now. And that's within the backdrop of the QE trade. So when you come back out to the broad market and you're talking about, well, why are we basic neutrality here, despite obviously a real good trend happening on the semiconductors? Well, if you're part of tackle trading, from last December, like December, first week in December, we basically broke down in the newsletter. We've been kind of talking about it ever since then. That way, is that the tale of two cities is not necessarily the differences between IGV and the semiconductors. It's really two big trades happening in the market right now. And one just kind of got started here in December of last year with the Fed announcement that they were going to move up the launching of quantitative easing. And we call that the QE trade. And what does the QE trade represent? It certainly doesn't represent technology. Technology doesn't really care about the QE methodology. What does it represent? It represents the Dow Jones. It represents, which is in a very good, consistent uptrend right now. It represents industrial components, which is on an amazing tear right now. It represents energy. It represents basic materials. It represents utilities, although AI does as well. And so you have a market that has done really, really, really well on the QE trade ever since last December. In general, not everything is obviously rocked, but in general. And so, how I kind of detail that in the backdrop of the Tackle Trading newsletter, and that's why you should read the Tackle Trading newsletter every single week so that you have an understanding of these macro conditions in the market, is the QE trade as represented through RSP, the equal weighted index of the S&P 500. Mark, when you look at the ES, which is the weighted index, that's basically flatline neutrality over the last 4 to 5 months. Over that same time frame, we're dealing with a really good uptrend in RSP. Both of them represent the S&P 500. One represents more of the QE trade because it's equal weighted RSP, and the other one represents the AI trade because it is weighted towards the Mag 7 components, which are the leaders of the AI trade. And so these two trades are dominant in the marketplace. And you can kind of tell what Twitter specifically trades because they complain all the time about Bitcoin and Ethereum and the AI trade. I'm like, why don't you go pick up your favorite industrial component? I don't see a lot of people, going out there talking about their favorite energy stock or their favorite industrial stock or their favorite gold mining stock but that's what's been working. And sector rotation, and this is a bigger part of sector rotation from the AI trade to the QE trade. But I do think that's what, in general, we have been seeing over the course of the last 3, 4 months. I think there was coming into the year, I think there was concern on the valuation side, specifically on the AI trade. And when I mean I think, I do know because that's what stood out to me when I did the AI gold rush in December. And that's what I noticed when I did the Tackle 25 research in December as well. We were going to start the year with a valuation concern. Now, a lot of times valuation concerns can be offset through growth, but that concern is playing out. Where when the market got that announcement on QE, it's like, well, where do we not have concern? Well, money's coming into the market. Where's it going? It's going into industrials, energy, basic materials. It's going into the cyclical side of the equation. And so this tale of two cities, when it comes to the market trends right now, is the differences between RSP, which represents the QE trade, and the ES or the NQ, which represents the AI trade. Which one's working right now? That's the QE trade. Now, I will say this on the QE trade. The QE trade just broke out, and we're dealing with some snapback support test, and there is some growing concern on the labor side of the equation. We'll talk about that here in a second. But my concern is not on the fundamental side. My concern is on the technical side. We're kind of going into late stage short-term trend on the QE trade. So, and with IGV specifically setting at the
Will you
200
explain,
weekly.
like for
Yeah, go
someone who
ahead.
doesn't know what that phrase is so important, late stage short term trend. Will you explain that phrase because it's a very important phrase to understand?
Yeah, there's trends within trends, right? And so you have basically, if you go back all the way to Dow theory, and we talked about this last week with the four core technicians, but if you go all the way back to Dow theory, there's multiple different time frames of trends. And if you go back to Elliott wave, you have fractal moves within trends, which means you have fractal patterns within a larger pattern. You have a fractal trend within a larger trend. And in trending analysis, you have three basic time frames: primary, intermediate, and short term. So the primary trend, when you look at it on a weekly chart, for example, on RSP, I would say this is wave one of the short term trend. Wave one of the short term trend would be the beginning point of the overall macro trend. But I would also suggest that that wave one in the trend is starting to slow down because we're at wave five of the short term trend. So in the longer term trend, you're in wave one, but in the shorter term trend, you're in wave five. And so that would give you an understanding that that longer term trend is going to start slowing down a little bit and probably reset to a certain extent. And so that's what I mean by that late duration trend on the short term. But that doesn't mean it's late duration on every trend. It just means it's a little bit overextended on wave one on the weekly chart. And then on the daily chart, you're in some degree of wave five trend here. So that's what it means. You're just looking at one trend within the backdrop of another trend because there are fractal trends. And if you don't know how to do that, I got a class next Monday and Tuesday that you can attend for free to learn how to do that in great detail because that is what I cover in Master Trader Mark.
Yeah, great, absolutely fantastic technical breakdown. Can I get you, and I want to move on to earnings real quick to get a recap there. But before I do, I got to have you highlight the MACD. I found that very, very interesting. Like, I don't follow indicators all the time like the MACD,
Mhm.
except when something that you write in the newsletter points them out. And, the MACD's been really, kind of been telling a bearish story, hasn't it?
Well, when you look at MACD, and there's a few indicators I cover in the newsletter, but specifically I do the basic ones of MACD and I do also RSI. RSI is not part of the conversation right now due to the neutrality in the S&P 500. RSI helps us understand extension levels going into breakouts. And if the market wants to break out of the 200-point range it's dealing with right now, we're not going to be overextended going into that breakout due to the consolidation. RSI has been basically living between 40 and 60 in the last 3 months. So it's not really part of the conversation. On MACD, one thing I think is important to understand about MACD is moving average convergence divergence. A lot of times people will assume as MACD starts inching back up to the zero barrier that that is a sign that the bulls are getting momentum. And it's not, and it's a misread on that. When you're looking at the ES and you look at it through the MACD lens, MACD has had constant decreases in resistance over the course of the
All
last
year
month.
long.
Constant decreases in resistance. That's showing you that the better part of the control, because MACD helps us understand the momentum. So who has control of the momentum? Outside of 1 or 2 days all year long, well, not all year long, but over the course of the last month, I would say, um, bears have had the momentum. Like even inside this neutrality, bears have had the momentum. So you look at, say, the last couple weeks, bears push momentum down, bears lose momentum back up. Bears push momentum down, bears lose momentum back up. Bulls aren't even part of the conversation yet. Like this is all bear on bear stuff. And that's the thing that I think a lot of people don't get about some of these indicators is they see that red histogram bar contracting back up to the zero barrier and they're like, "Ooh, the Bulls are getting the momentum." Nope, 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 nope. Bears are losing momentum, but that does not mean Bulls have it. Bears are losing it. Bears are losing it based on themselves. It's bear on bear stuff. Bulls don't get momentum until the zero barrier is crossed, and then they expand. And so until we see that, like this is still a bear. I don't want to say a bear moment because it's neutral right now, but on the MACD side of the equation, bears have had the momentum for the better part of the last couple weeks.
Yeah, no, I found that interesting. Now, Bears having the momentum a lot to do with the AI trade, and we'll talk about that here shortly. But it certainly hasn't been through earnings, Matt. Now, you're my earnings expert, but a couple stats that in the newsletter I found interesting. Profit margins at 13%, revenue growth at 9%. I think you gave earnings season a B plus, blended growth at 13%. Earnings season is going to come out, pretty decently, isn't it?
Yeah, it is. We got 74% of the S&P 500 reporting. We're on the back half of earnings season. After this week, we're completely done with earnings season. And as such, I do think it's been a pretty healthy environment. Blended EPS growth did fantastic. Blended revenue growth did really, really good. Profit margins are hitting a record number in the FactSet era. Since 2009, we've never seen that 13.2% profit margin. And here we are, 13.2% profit margin. I keep describing, and I've been writing about the earnings landscape for the last 4 weeks in the newsletter, as I do every earnings season. And the simple reality is every single week, ever since finance came out last month, has been an improving condition. EPS blended growth has improved. Revenue growth is really, really, really strong. I was pleasantly surprised by the revenue analysis, quite frankly. And so, whatever is happening in the market right now, it's not based on earnings. In fact, you take these software components in IGV, Mark, these software components in IGV that are seeing tremendous downward movement in price and over the last couple weeks have seen just absolutely smoke show. I mean, we're down 25% in just the last few weeks. Mark, earnings are going up, not down.
Yeah, I
In
actually tweet.
software, in
Yeah,
specifically in software, earnings are going up, not down. So earnings are going up, price is coming down. Man, that's doesn't that at some point scream bottom? Like
yeah,
at
no, because the whole bearish narrative on software, and we'll talk about this more when we
is
talk
that AI
AI,
is going to
but we're
cannibalize
not
the movement over the next 5 years.
collectively as a whole, we're not seeing that in the earnings. So it remains a one day argument. And bears, they can get some fearful, but boy, one day arguments have to turn into numbers
Well,
eventually. And
and let's face reality, no LLM right now is replacing all software components right now.
no, it is, hey, one day
Go
this
ask
might
your
happen.
chat GPT a question and see if it answers it 100%.
My chat GPT, that's
Now
about
see if
70.
you're going to trust chat GPT on your taxes.
Yeah, not quite yet. No.
No. So, but that's my point. It does, and I don't want to get too ahead of ourselves because I do know you have some questions on the AI, so we can move on.
All right. So, and I want to move on to that labor market report. So earnings in the check mark. Labor maybe not so much. Right now, we got some headline beats. Right, 130,000 jobs added. But Matt, when you take all of the revisions that where I think over 1 million jobs were taken away from previous,
Hmm.
the U.S. economy last year only added about 180,000 jobs for the year. For
So
the year,
slightly more than what the January report read, right?
for the entire year when you
Mind
get the
you,
revisions.
and again, mind you, the last month of Biden's presidency was more job gains than the entire last year.
Yeah, and so 180 for the
And
entire
by the
year.
way, There's not a second of my life that I believed that 130 number.
Yeah, you saw that 130 and you're like, that's,
I thought I was like, you guys are lying too much. You're making
so
it too obvious, guys.
the story really was about the revisions, man. And in my conversations with you and
But
you
why?
sharing,
Why? Why is the story about the revisions and not this headline number? Because the headline number, unemployment rate drops to 4.3%, average hourly earnings goes up to 0.4%, non-farm employment change 130, the best in all year long. Why is the entire conversation on revisions, and why is literally nobody of note talking about the amazing headline beat here last week?
because I don't believe anyone believes it.
I don't think there's a soul that believes the 130 number. And that's the problem with the economic landscape right now, is that the government has lost credibility in economic reports. They made the vastly bad mistake last year by firing the
I was
BLS.
just going to say the same thing.
And then they hired an idiot to come in that did not have the resume necessary to do that. He lasted about 3 weeks before he was gone, and now nobody knows where the numbers are even coming from. They have lost credibility, and that is a big time problem when it comes to economic reporting numbers. When the revisions get all the conversation and the headline numbers don't, it's because nobody believes the headline numbers.
No, it's the reality we're in. In fact, by the end of the week, Matt, rate cut odds were about where they started the week. And normally, if the market believed that number, and I'm talking about the market, like
Yeah, the
all
market.
markets,
And
right?
we're
The
not talking
market.
about
We're
your
not talking
friend
the S&P
from,
500.
yeah,
We're talking the market. If the market believed that number, you would have seen a sizable move
you
in expectations of
would have
not
been
as
getting
many rate
cuts this
cuts,
year.
right? You would not have seen it, right? Because labor
So
market.
what's the truth? The headline or the revision? Because it feels like the revision's far more truthful right
Well,
now.
I think the revision is far more, one, because it spans the course of time, and two, in a conversation with you, and talking about this over the last few days, Matt, what are the only industries that showed gains in
Well,
2023?
this is where I get very concerned on the labor side
Because
of.
I think this is where the conversation gets really interesting.
Well, and I think this is where the market's moving the conversation to over the next 2 to 3 years, because when you look at the labor environments, obviously, anytime we talk economics, everybody only thinks about the president and presidential politics and all that. It has nothing to do with the president, quite frankly. When you talk about that labor number and where the conversation is going, two industries have showed job gains in the last and consecutively over the last 18 months during the AI infrastructure build out. Those two job, healthcare services and construction, and well, three: healthcare services, human to human; construction, human to human; and education, human to human. Every other industry has shown a net loss in jobs. You want to
That's
talk
a
manufacturing?
staggering number
Manufacturing
over.
is getting annihilated right now in job creation. Like this whole bill of goods we were sold on the tariffs. This whole bill of goods we were sold on the tariffs was it was going to bring back manufacturing to the US. Well, what I said a year ago and what I'll say today is it is going to bring back manufacturing to the US for the robots to take over. It's not going to produce jobs for people. That is a fairy tale that needs to get out of the conversation because it's simply not going to happen. We haven't seen it in the last year. Manufacturing jobs have seen a net negative. We're not going to see it next year. We're not going to see it the year after. We're not going to see it as these big plants that are being developed come online, because that's all in time for Tesla and Optimus Robotics to go in and dominate on the manufacturing side of the equation. And so when you look at the labor market right now, my biggest concern is obviously concerned about the revisions and concerned about what that means for economic data moving forward. But my biggest concern is the US government is not having the right conversation on the labor market. We're so fixated on headline numbers versus revisions that we're not even talking about the epicenter of the problem. And the epicenter of the problem is AI. AI does not have emotional context. It's coming for everything, and it's probably only going to get about 20% of those jobs over the next 2 to 3 years. But over the next 5 to 7, I wouldn't be shocked if we see 30 to 40% disruption in the labor force. And we're just not even talking about that right now. We're talking about, ooh, look at this headline B. Oh, look at all these shiny little objects. Oh, let's have political discussions and debates, and let's yell at each other over the lack of context over headline numbers. The real conversation is AI is taking jobs, American jobs, impacting American families in a way that we are not prepared for as a society. And you see it in the data every single month, regardless of the lies we get told on the headline numbers. And so I get a little frustrated, honestly, when the entire debate is centered around presidential politics, when this conversation on the AI and labor is bigger than that. And we are falling behind the 8 ball when it comes to this conversation. And it's not a future conversation. It's not a down the road conversation. AI is replacing jobs right now. And you're not only seeing it in the labor force with the revisions, Mark, you're seeing it in total jobs out there in the market. 3 years ago, we had 11 million open jobs in the market. Today, we have like 6.5 million. Now, some of that is due to those were fake jobs, and some of that is due to now they just no longer hire. And Mark, it gets even worse when you look at certain demographics out there. You got young children, correct? How old are your
Yes,
kids, Mark?
they're the teenagers. They're 15
Okay,
and 17.
they're teenagers. Do you know what the unemployment rate for recent college graduates is?
Yeah, it's like insane.
It's abysmal. These are people that did everything right. Our society told them, go to school, get a job. Go to school, get a job. Guess what? Our society is still saying, go to school, get a job. Go to school to get a job in what? Because the only thing you're going to get is debt. So go to school and get a job so that you can have debt and not a job? Like, this is absolutely insane to me that for 40 years, our message to our children has been the exact same: go to school, get a job. And despite the fact that we are watching AI take those jobs right now, we're still supporting the government officials who are still saying, go to school, get a job. We as people still say to our children, go to school, get a job. And everybody's like, but are there going to be jobs? Like, these are big time problems that frustrate me up and down. But I digest. I don't think there's going to be a fix to it.
Yeah, well, the universal basic income is going to be one of
That
the
happens
fix.
after the war.
Well, let me transition to gold really quick in a
Well,
nice
everything I just
segue.
said is why you should buy gold.
Yeah, like seriously, like Matt just gave a case study on why to buy
And
gold.
before we move on, I'm not trying to come across as a radical on this. Like,
No,
you guys know me, the listeners know me here. I'm an analytical. I break these down analytically. I try to reduce the radicalism in all aspects of my analysis. I'm very nervous about what's happening with labor. Very, very nervous. And I'm not nervous for your generation, Mark. I'm not nervous for my generation. I'm nervous for my kids' generation. That's what I'm worried about. And when it comes to America, pick your bootstraps and lace them up a little bit tighter and get the job done. We have had one job in America for 230 years. We have had one job to ensure that the future generation is better than the previous generation. And we are absolutely failing at our job as a society right now. We are putting future generations in harm's way. And that needs to change. If we're going to get America back, we got to put those generations first. And right now, we are absolutely not doing it.
yeah, listen, I'm preaching on, brother. I believe it. I also believe I gotta ask,
Yeah.
after what war? Universal.
They, there's going to be a couple wars there, brother, if we don't get some of this macro
Universal
stuff fixed
basic
out.
income is the end
Um,
conclusion of this. There is no doubt. It is just the way it is.
Let me ask you a question.
All right.
At any point you get to 20 to 30% unemployment and people can't put food on the table, what happens?
There is social unrest.
social unrest. And if the government doesn't have an answer to fix the problem, what happens?
Well, that social unrest
And
escalates.
if the richest people in the world don't give a shit about it because they got robotics and money, what happens?
Ooh, that's an interesting
And
question.
what happened in France in the 17th century when 1% controlled 99% of the money and people couldn't and people were starving in the streets?
Well, let him eat cake didn't work out too well.
Ask Ray Dalio, who has studied a lot of this stuff. And I don't agree with Ray Dalio on everything, but history has a tendency to repeat itself because it repeats itself based on human nature. There are specific issues in America we need to solve. That's where I'll kind of end it for today.
All right. Well, gold, one of the things I found interesting, about gold in the last couple of weeks is the number of banks that have upgraded. Wrote about this in the newsletter, Matt. In the face of the little mini volatility, which gold has behaved very, very nicely,
Mm-hmm.
you've had JP Morgan, crank up their number to 6,300. UBS crank
End
up
of
their
year?
number to
Are these end of
60
years?
end of year. This is end of year. This is not, hey, one day it might reach. Wells Fargo targeting, in the last couple of days, 61 to 6,300. Basically central bank demand and, policy uncertainty,
Mm-hmm.
fiscal dynamics, the same general reasoning. But I found it very
I'll go on
interesting.
top. I'll say 7K.
Yeah, I found
I'll
it
go
very
over.
interesting that, in the face of the recent volatility, big banks said no, 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 right? And pretty universal, right? Pretty universal. So, and from a technical perspective, Matt, man, you got to love how gold has responded to the recent volatility, don't you?
Yeah, you do. It's obviously gold, silver, and a lot of different asset classes took it on the chin at the 1st of February, but gold had that 1 day sell off, and it's been basically trying to alleviate volatility ever since. I, I don't try to agree with the banks very often, but when I do, it's usually on gold analysis. There you go. I definitely see it as a price appreciation asset class, and I don't think honestly, when we look back 5 to 7 years from now, 5K is going to be cheap.
Yeah. So, gold, right? We don't have time in this podcast because we got other things to cover. But did just, it wouldn't be a trading justice podcast if we didn't spend a minute on gold.
I did read a report there was a lot of out of the money call option buying.
I saw that too.
Mhm.
Like some speculative out of the money
Like
call.
not small money though, like
Yeah,
big time money.
so yeah, know your levels. That 5,100 level looks pretty clean for the next risk on signal.
Confirmation
Matt,
close above 5,100 would be it.
really quick in the coming week, kind of a light week from a headline catalyst. We got Walmart earnings on Thursday after the bell. We got some fake, economic data being released at the end of the week. PCE price index, some manufacturing and services, but pretty light week overall. Compared to recent weeks, isn't it?
Yeah, I would say the number one report I would say is the advanced GDP report. It is slated to come in at 2.8%. Last quarter was at 4.4%. The reason I feel like this one's important is it's the first report in GDP it's in the series of GDP. That's number one. I think Friday is an important economic day in general, by the way. GDP on Friday, PCE price index on Friday, manufacturing services index numbers on Friday. And by the way, my concern on economic data is not all economic data. It's the labor market data. I think and it's not just the fact that the government is outright lying, although I do think there is some fudging of the numbers here. Um, it's it's becoming very difficult to get an accurate number in labor, extremely difficult. And so it's not just nefarious actions at a government that is creating some lack of accuracy on the labor data. I think it's getting once again very difficult to even get an accurate number, just given the fact how we have a gig economy. We don't have the same economy we were in the 1980s, and so I think we probably need to look at better ways to identify the labor market. But as of right now, like it is what it is. But I don't have the same concern on, say, Oh, the PC price index, for example. I don't have the same concern on advanced GDP. I don't have the same concern on flash PMI numbers, services PMI numbers, and across the board. It's really, really based on those two massively important reports out of labor and CPI.
All right. Let's talk some AI, brother. Right.
Yeah.
Like, listen, I probably had this last week, because you and I both, we follow news, pretty religiously, right? Consume a lot of news. I probably had more notes on AI in the last week than I had in any week in a long, long, long time. The headlines seem, to be pretty consistent, pretty constant, and just had some general questions come out of all of those headlines that I just thought would make for a good discussion with you. So I got several questions, and we can just take the conversation where it goes. Are you ready?
Sure.
All right.
Were these
First
just some
question.
questions you had and or
Yeah,
the
these are
different
this is kind
community
of like a cumulative ethos of questions
or okay,
out there in the
gotcha.
market right now. Not me specifically, just kind of like, when you judge them all. Let's start, no particular order, but I want to start with, kind of the is AI in a bubble, because that thing will not go away. It will never go away. But phrasing the question, are valuations still ahead of fundamentals? Now, Matt, when you have your AI gold rush list, what's the average, valuation on that list, in trying to answer that question quantitatively?
You know, I can't tell you the specific PE ratio as of right this very second. Um, I'm doing my research for tomorrow's webinar, but it's still fairly elevated, I would say. When you look at the way I do it is I break it down into tiers, tier one, tier two, tier three, and tier four. Tier one is kind of the kings, the AI kings. You can't tell the story of AI without these companies, and they have their greedy little fingers in absolutely every iPod out there. I don't have a specific valuation concern on those. Those companies from Google, Meta, Microsoft, Nvidia, and Taiwan Semiconductor, I mean, you're talking about an average P ratio probably around 31. And, outside of Taiwan Semiconductor, those are Max 7 components, and I would throw Taiwan Semiconductor into there. If I had to say the average PE ratio somebody has had to pay in one of the Max 7 over the course of the last 5 years, I'd say it's north of 30. And so I wouldn't say the valuation concern, and there is still a valuation concern, but I wouldn't say it's in the leadership. You see it right here. PE ratios 2020. Look at the forwards, all in the low 20s or high teens. I don't think you can make an argument that you're not getting fair value here. That's around a 20 PE ratio according to Warren Buffett. But again, these are premium stocks. You're not getting fair value without some type of market crash. And so that's number one. You go down to number two, which is the tier two, and you start to see elevated PE ratios. You 70, 50, 50, 68, 48, 39, 30, 54, 68. Forward PE ratios all a little bit better. Okay, so yeah, still getting a little bit, not a little bit, but fairly high valued there, I would still say. You go down to tier three, and man, you start getting into some of those lesser known software names, and you're still dealing with some pretty aggressive valuations. You go down to tier four, and half of them don't even have a PE ratio right now. The other half have pretty decent ones, but these are tier four, like specific companies that do a specific service within AI. They don't focus on multi aspects of the AI trade. And so I would say when you're dealing with the AI trade right now, I would say yes, they are still fairly elevated on a valuation concern, but they've always been highly valued. Even 2 years ago, they were high PE ratios. Mark, it's not like at the beginning of the AI trade, when Nvidia reported its first earnings report in the second quarter of 22. It wasn't like we were dealing with NVIDIA at a 9 PE ratio right then. NVIDIA had like a 40 PE ratio back then. It's actually went down over time, Mark. That's the craziest thing when you think about NVIDIA and some of these other AI stocks. And so, yes, they have always had fairly high valuation. The ultimate question is, can the growth analysis outweigh that fairly high valuation? And that's where you start looking into one of my favorite fundamental criterias, and that's the PEG ratio. And when you look at the PEG ratio, it takes into account valuation plus growth. And when you look at the PEG ratio, for example, you go into tier one, which doesn't really have a problem on the PE ratio in my estimation. I mean, we're dealing with slightly high valuation, but I wouldn't say it's abnormal comparison to what people have had to pay for any of these stocks on tier one for the last forever on Google, forever on Microsoft, forever on NVIDIA. But the PEG ratio on Meta is under one. PEG ratio on NVIDIA is 0.48. PEG ratio on Taiwan Semiconductors is 0.85. That's downright froggy, quite frankly. And so there's always a two-part evaluation when it comes to the fundamental nature of something. When you're dealing, and too often times people are like, well, what's the PE ratio? Well, are you dealing with Coca-Cola and that's the only thing that matters is the PE ratio? Or are you dealing with NVIDIA and you got to talk growth? Because there's two parts of that story when it comes to growth stocks. Valuation is one, growth mechanics is second. And the number one metric that takes into account both of those is the PEG ratio. Anything under one in a PEG ratio, I think you're getting a value. And so, even despite the fact that Taiwan Semiconductor currently has a 34 PE ratio and a 21 forward PE ratio, it has a PEG ratio of 0.85, which means growth, the expected growth coming out of Taiwan Semiconductor, and I can tell you, I agree with that given the recent earnings report, outweighs whatever valuation concern you have. And so tier one, I would say I wouldn't say there's a fundamental concern there in tier one. I think in general the QE trade is just a dominant trade. When you come over to tier two, you're starting to see a lot of much better PEG ratio despite the higher valuation. When you go into tier three, you can kind of see it a little bit across the board. Look at those PEG ratios. And when you're dealing with tier three, that's when you start talking about those software components and they do have higher valuation and they don't have current growth mechanics that is offsetting that. And so I would say in general on the AI trade, the specific question was has what was the specific question so I can answer it specifically?
Our valuation still ahead of fundamentals.
Again, it depends, but I would say no to tier one, tier two. I would say yes to tier three.
Now, and Matt, since we're on the software page, a lot has been made in the last week or two about disruptions in different industries where AI is going to come in and disrupt, certain industries. I look at some of those software components with still, fairly high valuation. And sometimes, it's crossed my head more than once that this whole AI coming in and disrupt software and make software obsolete and destroy the business models of certain companies is a little bit overblown. And what we might have had is just a good old fashioned repricing event.
Well, let me ask you a question because you're right. On tier three, those specific software components in the AI trade are extremely elevated on valuation. And I do agree that the AI revolution will eventually replace a lot of software. Does that mean Microsoft is going to be out of business?
No, of course not.
Well, Microsoft's doing the exact same thing IGV's doing. Microsoft's doing the exact same thing that the rest of the AI trade is doing. In fact, I would say Microsoft has been a catalyst in the downward pressure in price in IGV. And so no, I don't well, and let me put it like this. I also don't think AI is going to rip out the death, going to be the death of software in the next 2 to 3 years either. And so I do think there's some short-term, long-term things going on right now. In the short term, these software components are reporting really good earnings, including Microsoft had a very good earnings report. They just had a slight miss on cloud. That was the problem with Microsoft. But yeah, I would say they've had really, really good earnings. But there is some long-term concern on software. But I don't think that's going to be in the short term. I don't think I feel like I would go ask Grok to do my taxes and have it be accurate. The AI platforms are still not very intelligent, quite frankly. And if you're not a subject matter expert, I don't think you can trust AI right now. And so, as somebody who uses AI every day from a content perspective and a research perspective, and I would consider myself a subject matter expert in a lot of the things related to the financial world. You can't trust a lot of what AI produces right now. You have to question everything. And so I don't think Grok or ChatGPT or Claude is coming for your local tax software right now. In fact, I think the best individual companies are going to create AI solutions that will help in that regard. And so I think it's a little bit overblown right now. And I think a lot of times when we deal with something like this where a market is contracting in a specific area of the market contracting IGV, IGV is down 25% in a very short time period. When you're down like that in a very short time period and you're having a valuation concern, for the market, what I have found, it's easier to point to some other problem and use that as the rationale when you're really talking about a valuation problem. And so I've seen a lot of people, spill a lot of ink over the course of the last couple months describing the problems in the AI trade. And in my estimation, it most likely was a valuation concern coming into the first of the year that is being wiped out.
Yeah, I think that's what my gut tells me on this, right? And my gut also tells me no one 100% knows, but I love the common sense approach that you have. Like, would you trust Grok with your taxes? I think that's resonates on a common level, helps people understand. And if you can't trust Grok with your taxes, then some of these more complex softwares,
Then maybe your tax software company is okay.
they might be okay for a minute. And they'll probably be at
I
the
think
leader.
I think we're seeing a little bit of short-term overkill here. I
I
I,
think
I
so.
do. But again, there was a valuation concern coming into the market this year, and that is getting alleviated a little bit as we start working south. I kind of find, despite the fact that I've been reading a lot of people putting the death sentence in software, yeah, I think there's certain software out there that's absolutely garbage. I think there's some software companies out there that are not going to last. I do think AI is going to kill some software companies, and I think it's going to make other software companies extremely rich.
Yeah. Let's go back to that Microsoft real quick, because one of the most common questions in the last week are on the hyperscalers. And
Mhm.
is CapEx going to become a problem? Reports from Morgan Stanley that CapEx this year is going to be north of $720 billion.
Mm, they're
You
low.
know, $720 billion. And is CapEx been an issue? Because you're starting to see the
I don't
CapEx.
think it is
You know,
personally.
and why not?
Cause I watched Field of Dreams one time, and if you build it, they will come. That's why. If you don't spend CapEx, what are you gonna do? You're not gonna have the energy and the capability necessary to build this out and win the AI arms race. Like, what are we talking about? So we're just gonna rely on Apple to not to provide everything. Like they're not producing anything right now. And so I saw somebody come out and be like, well, Apple's not spending anything on CapEx. Everybody else is doing all this spend on CapEx. And I'm like, yeah, but Apple's not going up. So Apple's down. They're not doing CapEx. So describe why Apple's not going up then. And so if the problem is CapEx, why isn't Apple up 20% this year so far? Truly, I'm waiting.
Because they're a glorified consumer staples company.
Doesn't answer the question. If CapEx is the problem, and that's the way we're determining why Meta went down on earnings, why Microsoft has went down, why Tesla has went down, when a lot of them look very similar to Apple. So if you answer the question, if CapEx is a concern, why isn't Apple up?
Well, I think it's a little apples and oranges, a little bit there on
Mhm.
that, right? Because Apple is its own unique type of company. Um, what I come back to CapEx on why, approaching the argument somewhat similar to you is that if you're investing in a company, you cannot lose the AI arms race.
Mm-mm,
You can't.
mm-mm,
You can't lose it because that actually is what puts an existential threat to your business.
mm-hmm,
It is not the okay, how are we spending more free than our free cash flow is starting to bring in because these companies have been so free cash flow rich for so many years, right?
mm-hmm.
That it's a little weird to see that not be a positive metric. But you can't lose this race. You just can't.
I don't think CapEx is the problem personally.
Yeah.
The same way I don't think all software components are going to die next year. Like, I think there's some radicalization in how we're describing a valuation concern in the market. And personally, and again, I go back to Meta. Meta increased CapEx. Meta was one of the first to report in earnings season of the Mag 7. You had Tesla before, but Meta was the big one on CapEx. Meta had a shocking increase in CapEx spend. Mark, they gapped up 10%. So was it CapEx on Meta? Why they gapped up? Like, and so I have a hard time generally describing the issue with the AI trade right now as CapEx spend. If the average PE ratio paid in the market right now is 27, I don't think anybody would be talking about CapEx spend. I think they would see it as a benefit the same way they did for the first 2 years of the build out.
Yeah, I'm with you. I'm with you on that 100%.
And I just
Another
go back to the Field of Dreams. If you build it, they will come.
and a related question is, has the AI infrastructure cycle peaked?
No,
Which is
no,
obviously a no.
no.
I go back to something the Google CEO said that he would rather go bankrupt than lose this race,
Mm-hmm.
right? Which means the infrastructure, those pick and shovel type plays within the AI space, the Microns, the Nvidias,
See, and
your
when you hear
semis.
from him, think about this for a second. Every single person that you read, and I know you read a lot, you do a lot of research, you check into your traditional news sources like CNBC and your non-traditional like Zero Hedge. In every single one of those articles that you have read, they have generally described the AI trade through software is dead, CapEx spend is out of control, and
They're
valuations are a
trying to
nightmare.
attribute
Okay.
why the tech trade, the AI trade is soft, and they're trying to search for reasons.
It's soft because the Fed launched QE and all the money went to industrial for a 3 month time period. I digress.
No, but there's some truth to what you say. I've long believed that the markets, yes, you can have a day where the market you and where everything rallies, right?
Yeah.
And after big sell-offs like Liberation Day, where you'll have everything rally for a little bit. But like you go back and study the market for the longest time, markets have a very hard time lifting everything at once.
Mm-hmm.
It just doesn't happen.
Doesn't happen.
It just doesn't happen. And the easiest explanation to me about the softness of the AI trade, and maybe there's some other thing, we'll talk about some of the biggest risk and labor here in just 1 second. Maybe there's some other things weighing on the market, is the fact that you've had one area of the market, the cyclicals robust, and you're not going to have tech rally when that occurs.
I think it's simple. I think coming out of Q3 earnings, there was a valuation concern on the market and specifically the AI trade, and that was the dominant trade. That was the only trade in the market. In early December, the Fed announced an early start to quantitative easing that launched the QE trade, and ever since then, we've dealt with downward pressure in AI to a certain extent and upward pressure in QE. QE took the AI trade, and now we're going to see some rotation, in my opinion.
Yeah, no, and I think it's not more complex. I don't think it is a capex. I don't think it. Yes, is there disruption, and are
Oh, of
certain
course.
industries going
Yeah,
to be disrupted? Of course there are, right? Of course there's going to be disruption.
you're right. Yeah, profit margins have went up to a record
But
number this
what's
quarter.
at the heart of, right? It's not that the structural aspects of the AI trade are dead.
The
In
heart of
fact,
the AI trade is two things. It's the infrastructure build out and it's the efficiency argument.
In fact, I've seen one of the questions I've seen asked are, have we've already seen the biggest gains
No.
in the eight? And I think you and I both, we haven't, we didn't talk about this before, but I think both of our answers no.
In the Industrial Revolution, did you see all the gains made in the first 3 years, or did people 100 years ago, 100 years later, still make a lot of money?
Yeah, no, I mean, and
Like
plus
people
I
got to
think,
get out of this short-term mindset. Like this ain't a swing trade, guys.
but so much of the market, infrastructure of news reporting, they have to. I mean, they talk about these segments like they are swing trades, right? Like the causality, right? Like, oh, price movement this quarter is X. That must mean something more dramatic than what it is, on that. But, you know, if there is something beyond, our explanation, what's the biggest risk to the market, do you think, right now from the AI equation?
Labor.
Pretty,
I don't think there's a close second.
you know, just, just,
My if if IA displaces 20% of the labor force, we're going to have a consumer spending problem big time. And if we don't have some degree of answer to offset that, because those jobs will never come back, you could be dealing with some recessionary analysis in that.
okay, in that.
I think the number one issue is labor. I don't think there's a close second. Obviously, there's going to be other concerns along the way, but I think from a macro perspective, it's disruption in labor.
From on the labor perspective, but
Mhm.
and you mentioned last week, like that's not necessarily bearish for
It's
the
bearish for
fundamentals.
people, but profit margins go up. So
So unless those companies are taxed at a higher rate to pay for universal basic income, and
that ain't
and is
happening in the next 2 to 3 years.
that's just a down the road conversation. There's not the political capital for it.
Not yet. People don't even understand what the AI trade is yet. Like they use Chat GPT and they judge everything based on Chat GPT and they think this is going to go nowhere and then they don't have a job. I don't think there's political capital necessarily. But I also think that happens very quickly. I don't think it's a 2 to 3 year conversation. I think UBI is probably a 5 to 7 year conversation.
5 to 7 years, huh? That's a
Is
lot.
the government chock full of visionaries who understand these topics?
No,
Or are they chock full of people that want to go post things on X
and scream Dow 50,000.
and scream down 50,000 to offset a child pedophilia ring at the government level? Yeah, it's not happening. So I think the labor disruption is going to happen first, and I think the
And
people are going
and
to have
if
to
you're
deny it.
even close to that, then coming back to the what is weighing on the AI trade, what's weighing on tech, it's probably not a market seeing that far out on disruptions of labor, is it?
Say that again.
Like, like trying to find, because I think you and I both believe that this is like, a valuation, like, rotation.
I've seen a lot of smart people and a lot of dumb people try to explain what's going on in the AI trade, and I've seen probably 30 different responses, and I think all of them simply are ways that we add the context to the understanding of what truly is a valuation concern.
Yeah, I think it's just that simple. That
Yeah, and,
simple.
and I'm not trying to say that there isn't some concern on CapEx and there isn't some concern on the commoditization of it and there isn't some concern on software. There's a lot of concern on software. There's a lot of concern on labor. But Mark, there's always concern. There's concern in every aspect of the market. I think a lot of that concern is elevated due to the valuation that everybody has.
Yeah, no, and if it is a valuation giving earnings time to catch up, that will play itself out beautifully technically, right?
You're seeing
At
it
least,
on Nvidia. Nvidia has been flatlined for a little bit of time. Valuation has come down.
yeah, you'll see it technically on the chart, and then you'll see, well, guess what? There will be a time period where technicals, bottom,
I
where
personally think it's time to go start hunting for your favorite software components
yeah,
and put them on the radar for reversal formations. I want to catch a falling knife, but put it on the radar for reversal formations.
yeah, I just don't have this as a meta, no pun intended. Pun intended. I really didn't mean it to, a problem. It's more of, the valuation rotational aspect.
Yeah.
And there will be a time period tech leads, and then all of a sudden, They
Mark,
don't
the
talk
biggest
about,
problem with the AI trade is the Max 7 component of it.
you know, they where they're not talking
They're not leading it right.
CapEx and they're not talking this and
Yeah.
that, and all of a sudden there will be new narratives in the financials. So pay attention to those
Well,
technicals.
and I'll just one last point on the AI saga here. Should I listen on the importance of AI on people who are judging the AI infrastructure and the AI trade based on their personal utilization of the AI LLMs in their current iteration? Or should I listen to the Google CEO?
Yeah, well said.
Yeah.
Don't have anything to add there. I do have one question though.
Mhm.
Closing up this segment, like on your own AI list, who do you see moving up and down? Like, are there certain companies in recent quarters
Mm.
that have justified this is a more important, becoming an increasingly more
Tesla's on
important.
tier three right now. They're getting upgraded on their on Elon's decision to shift to robotics as the primary source at Tesla, XAI, and whatnot. So Tesla will get upgraded. I think Micron, even though it's not a Max 7 component, given the fact that they own the monopoly on memory, I think they're a tier one component personally. So I'll have an interesting conversation on Micron. VRT Verts, they're an infrastructure play in the AI build out there on tier two. They're low end tier two. They'll probably get upgraded a little bit. I think the biggest changes will probably be on tier three software as I look to find the best software components to put on reversal watch. And I will use that. I usually don't care about technicals when I build out my watch list like this, but given the
Technicals
fact
will
that,
tell the truth here. If we
yeah,
are close to being right, close to being
yeah,
right, technicals will tell the truth here. I
I
came
agree.
away from this conversation more bullish than I was coming into it. And I had the causality as rotation and valuation, much
Yeah,
like you.
I'm slightly concerned about the AI trade right now. I'm not concerned about semis. Obviously, my concern is really kind of, relegated to software, but I just think that software has an ability to start reversing. I mean, we're down 25% off the highs. We're around that 200 weekly moving average. And, I'm a technician through and through. And when you're sitting at the 200 weekly moving average, I have a tendency to believe that, you know what? Yeah, there might be some of these companies that are garbage, but let's go find the ones that aren't.
You ready to play a President's Day trivia game with me
Oh,
to close out the podcast? We're
of
recording this
course.
on President Day. First of all, who's your
Okay.
favorite president of all time?
Uh, it depends on how you categorize
I
it.
know. Listen, I knew you were going to
Um,
say it. No, you're only allowed one. This is
Abraham
this is a
Lincoln.
Abraham Lincoln. Okay. See, was that hard?
Yes, Thomas Jefferson, George
Uh,
Washington, Ronald Reagan.
all
Like,
right. So I
I'm,
got a bunch of trivia questions. We're going to do this rapid fire style. Some are easy. Some
James
are.
Madison was a badass. Like,
Yeah, some of these are near impossible. So you ready to play rapid
I
fire
am, I
style?
am, I am keen on the founders. I'm in with the founders. Like
All right. And
that's
so I want you to play along at home. This is a fun present day
President's
trivia.
Day. Okay.
Test that. All right. So we're going to just start these one at a time. Who's the only president to serve more than 2 year terms?
And that would be FDR.
FDR, Franklin Delano Roosevelt.
Basically three and
Which,
a half. Did he get three and a half, basically?
yeah, like three and three
Three and a half.
quarters.
Yeah.
3 3/4. Who's the only? What founding father wrote the Declaration of Independence and later became president?
Uh, he also made the greatest trade in the history of mankind. Was also a diplomat to France. One of the greatest Americans of all time, Thomas Jefferson.
All right. Who was the first president to live in the White House?
Madison.
No, John Adams.
Adams. Dang it.
John, if you would have watched the HBO
I did
special,
watch the
John,
HBO show.
then you forgot it.
It's been a while since I watched that show,
That's
but
such a good show. That's such a
I
good.
knew it was one of the first four, and I just threw out a guess. It wasn't Washington. I knew that. So
What president is on the $20 bill?
$20 bill. Oh my goodness. Is it Jackson?
It is Jackson,
Yeah.
Andrew Jackson. You almost like had a brain fart there.
I did. I was like, oh, should I pull out a 20?
All right, here's a softball. What president was also a movie actor before taking office?
That's the great Ronald Reagan.
The great Ronald Reagan. Who's the youngest person to ever be elected president?
JFK.
JFK. See, look at that. You're on fire. Who is, I don't know if you'll get this one. Well, one of the, okay, okay, the next question was what president organized the Louisiana Purchase, but you've already answered that.
That was TJ.
And I'm not going to ask you what president is known for the Gettysburg Address because that would be,
Would that be Polk?
yeah, that would not be. And I'm not going to ask you what president was the only president to resign office.
That has to be Buchanan.
No.
No, of course not. That's Nixon.
Okay. What was the first
I got a
president?
question for you. In today's age, 2026, would Nixon still have had to resign?
No, he would not have.
I don't think he would have either.
Nope. Absolutely not. Not the way,
By the way, I know Nixon gets written like he was a horrible president. He had a couple shining spots, Nixon did.
No, President Nixon would not have had to resign in today's, partisan.
In today's party
environment.
politics, that would have been another day that ends in Y.
Yeah, it would have been nothing.
Mm-hmm.
It would have been framed like it was a complete
I think we have more controversies every other day, truly.
Yeah. Who was the first president to appear on television?
On television.
I didn't know the answer to this one.
I know the first debate was JFK and Nixon, but it's got to be before that.
Yeah, of course.
FDR was radio. I'm gonna say Truman.
It was FDR, actually. It was the first one to appear on television. You're close. Which president was never elected as either president or vice president?
Huh. Never elected as president or vice president would be Ford.
Yep, Gerald Ford. You got there. Recently made a Netflix miniseries about who was the first left-handed U.S. president.
There was a Netflix miniseries about this dude?
Yeah, it's actually really, really good.
First left-handed president.
First left-handed president. Short term in office, didn't last very long. Was assassinated.
Was the guy in the late 19th century?
Yep.
McKinney?
No, that was early 20th.
Who was it?
James Garfield. They actually did
I did not know that.
They did a Netflix miniseries on him with like 4 episodes. Super good. Really, really interesting. You should check it out.
Like, I will. I definitely
like it was
will.
like surprisingly good.
I love presidential stuff.
Like, that James, like it was just really, really good. Okay, a couple that like who is the only president to hold a PhD? There's no way you know this.
Well, they didn't have those back in the day. Huh. PhD. Was it 20th century?
It was.
I'm going to guess it was not PhD, huh? Oh, man, this is going to get me. It wasn't Obama. He had a Juris Doctorate. It wasn't Clinton. Was it Clinton?
No.
Who was it?
Woodrow Wilson.
I'm hating myself right now that I did not guess Woodrow Wilson. I knew that.
You knew that. You knew that.
I did. I've literally written an essay on the Versailles Treaty emphasizing on Woodrow Wilson back in college.
Which 2 presidents died on the same day, July 4th, 1826?
Oh my goodness, I know this, and I'm forgetting off the top of my head. Just give it to me. But I do know this. It's going to take me a minute.
Jefferson and Adams.
That's what I thought it was.
Which, once again, had you watched the John Adams HBO?
No, I did. I knew it was in the early 6, and I should have just guessed, but I didn't know.
All right. Who was the tallest U.S. president?
Was that our boy Lincoln?
It was our boy Lincoln. It was. And then there is no way in the world you know this. Which president spoke fluent Mandarin Chinese? There's no way. Like, if you're at home, there's no way anybody knows this. Like, This is one of those like less than
All
one
right,
of
you got to
one.
give a hint.
20th century.
You gave me a hint with 20 presidents. All
Uh-huh.
right, I'm I I'm going Johnson.
Herbert Hoover.
Hoover? Hoover knew Mandarin?
Mandarin Chinese. I like when I saw that
Oh
trivia, I
my
was like, we're gonna
goodness.
end on that one because that's one that like there's no way
Mark
anybody
it
knows
in.
that.
Yeah, I didn't know
There's
that.
no one anyways. Listen,
I
I
was
enjoy.
I was trying to figure out somebody close to the Chinese trade deal in the 70s. And so no, no. I really enjoyed that presidential
It's
game.
a fun
Thank you
game,
for
a
that.
fun little game. Listen, I enjoy the AI conversation. I think, like there's so many headlines and so much information. It is good to have discussions on these matters with other individuals to flush out ideas, come with conclusions. I thought ours were surprisingly close to one another. I still am taken back by your takes on jobs. It makes me rethink a lot of different things in the market and
Very
just
concerned about the labor market.
from a society perspective moving forward. That's obviously going to be a major societal, and we'll see if it's a market story. But for
I
now,
don't think we will ever deal with more disruption in our lives than what we will be going through in the next 5 to 7 years from a labor perspective.
and
Yeah,
obviously,
from a culture, society perspective.
as we see those trends unfold and as we see market impact, we'll obviously continually break them down in
Yeah.
our pro community and here on the Trade and Justice podcast. So send us out, brother.
Yeah, if you love the Trading Justice podcast, best way to support it is leave a nice little comment, hit that like, and tell somebody about it. And if you're looking for an amazing community to call home, Tackle Trading is that home for you. You can get a 15-day free trial, hitting the link in the description below. And when you're ready, sign up for Master Trader. Come join me next Monday and Tuesday. And if you don't know how to sign up and you still want to join, email Coach Mark at team@tackletrading.com. With that, I hope everybody has a blessed week. And if you need anything from us, let us know.
Have a great week, everyone.